What if I told you that one number could affect your ability to buy a house, finance a car, get approved for a credit card, or even save thousands of dollars in interest? That number is your credit score. Many Americans struggle with credit because nobody teaches it in school. Some people believe you need to be rich to have an excellent score. Others think carrying debt helps build credit. The truth is much simpler. In today's video, I'll explain exactly how credit scores work in the United States, what factors influence your score, and the practical steps you can take to reach the elite 800+ credit score range. Stay until the end, because I'll also share common mistakes that can destroy your score without you even realizing it. Let's get started. Section 1. What is a credit score? A credit score is a 3-digit number that represents your creditworthiness. In simple terms, it tells lenders how likely you are to repay borrowed money. The most common credit score models in the US range from 300 to 850. Here's a general breakdown. 300 to 579, poor. 580 to 669, fair. 670 to 739, good. 740 to 799, very good. 800 to 850, exceptional. When your score is higher, lenders view you as a lower-risk borrower. That can help you qualify for lower mortgage rates, better auto loan terms, higher credit card limits, more premium financial products. An 800+ score doesn't just look impressive, it can literally save you thousands of dollars over your lifetime. Section 2. Who creates your credit score? Many people think there's only one credit score. Actually, there are multiple scoring models. The most popular is FICO score. The major credit bureaus in the US are Experian, Equifax, TransUnion. These companies collect information about your borrowing habits and payment history. When you apply for credit, lenders often use data from one or more of these bureaus to evaluate your application. Because each bureau may have slightly different information, your scores can vary. That's completely normal. Section 3. The 5 factors that impact your credit score. 1. Payment history, about 35%. This is the most important factor. Do you pay your bills on time? One late payment can significantly hurt your score. The best strategy? Pay every bill before the due date. Set up automatic payments whenever possible. Remember, your payment history follows you for years. Consistency is key. 2. Credit utilization, about 30%. Credit utilization is the percentage of your available credit that you're using. For example, if you have a $10,000 credit limit and your balance is $2,000, your utilization is 20%. Experts generally recommend staying below 30%. For the best scores, many people aim below 10%. Lower utilization signals responsible credit management. 3. Length of credit history, about 15%. The longer you've responsibly used credit, the better. This is why closing old credit cards can sometimes hurt your score. Older accounts help establish a longer credit history. Even if you don't use an old card often, keeping it open may benefit your score. 4. New credit inquiries, about 10%. Every time you apply for new credit, a hard inquiry may appear on your report. A few inquiries aren't a major problem, but applying for multiple cards or loans within a short period can lower your score temporarily. Only apply for credit when necessary. 5. Credit mix, about 10%. Lenders like to see that you can manage different types of credit responsibly. Examples include credit cards, auto loans, student loans, mortgages. You don't need every type of credit, but a healthy mix can help your score over time. Section 4. How to reach 800+. Now let's talk about the strategy. Step 1. Never miss a payment. This is non-negotiable. Even one late payment can damage years of progress. Use reminders, calendar alerts, or autopay. Step 2. Keep utilization extremely low. If possible, stay under 10%. For example, if your credit limit is $5,000, try to keep balances below $500. Many people with scores above 800 keep their utilization in the single digits. Step 3. Keep older accounts open. Your oldest accounts help your average credit age. Closing them can reduce that average and potentially lower your score. Step 4. Avoid unnecessary applications. Every application creates a hard inquiry. Don't apply for credit cards simply because of attractive promotions. Be strategic. Step 5. Monitor your credit reports. Errors happen. Incorrect late payments or fraudulent accounts can damage your score. Review your reports regularly and dispute any inaccuracies. Step 6. Increase available credit responsibly. Ignoring credit report errors. Crossmark co-signing loans without understanding the risks. Crossmark carrying unnecessary debt. Remember, building excellent credit is a marathon, not a sprint. So here's the bottom line. An 800-plus credit score isn't about being wealthy. It's about demonstrating consistent, responsible financial habits over time. Pay on time. Keep balances low. Avoid unnecessary debt. Maintain older accounts. Monitor your credit reports. If you follow these principles consistently, your score can steadily improve year after year. If you found this video helpful, don't forget to like, subscribe, and turn on notifications for more personal finance content. Thanks for watching, and I'll see you in the next video.